Welcome to Profiletraders. This is Reza and you're listening to my market analysis for December the 1st. If we go back to what we discussed yesterday, I stated that we were in a trading range that was confined between 2081 to 2100, and I stated that the best deal would be to avoid the middle and act from as close as possible to the extremes. And this morning, as we got a run to the upside and we approached 98, which was very close to 2100, we got a very severe reversal, and then we traveled all the way to the other side of the rotational boundary down there, and then bounced from that point and then roared back up to close very strong into the close. There were a couple of things out today. We had a Federal Reserve guy that was out. He was very dovish. He stated that in order to raise the rates, they need to see more visibility that economy has definitely stabilized in a much more strong manner. And we also have a very strong easing package that is supposed to be released by the European Central Bank this Thursday. However, whatever it is, the market has absolutely no fear nor any kind of a rush to exit or take profit on the back of this last leg up. And matter of fact, we are now very close to a breaking point. We are very close to come and retest this very recent all-time high of 2117 is few points away. And it could very well be that if they want to take this up in order to clear that top, which we have tested 1,000 times and have been unable to break, if they want to break it this time, this is it. This is the moment to do it. As you can see on the daily, we are very close to this all-time high. So to summarize things, is that market is very interested to see what the Federal Reserve will do with this coming meeting middle of this month. But there are several problems that the Federal Reserve has. Number one, a very strong dollar. Number two, hiking rates in the middle of holidays and also going into election year is something very unusual. Number three, the economy is definitely not as strong as the Fed pretended to be, since our average rate of growth is about 1.2%, and if you look at all the other economies around the world, they are suffering as well. Therefore, is this now the best time to hike rates? Is this now the best time to make the dollar even stronger and allow every other nation out there to devaluate their currency against ours and gain trade advantage? That is to be seen. But to tell you in the very big picture of things, this is a potential inverted head and shoulder. If we do break to the upside on this new high, literally we can go up another 100 from the 2110. Because if I take the 2110 break up point and then measure that distance to this low here, this is about 100 points. On the other hand, what can very well happen is that we break the 2110 very marginally by 5, 6, 7, 8 or whatever points, and then at the end of the day we return and close back into it, at which point it will be potentially very negative, because it will then be the start of a bull trap where the late buyers would come in, buy this break above 2110, thinking that there will be an explosion up, but rather see a reversal and a close at the low of the day, and then they will be trapped. But in any case, we are no doubt very close to a very important pivot point. We are going to either explode from here quite aggressively, or if we come down and break below the 2080, then this is wide open to drop to 2066, and if 2066 doesn't hold price, we are going to 2044. But if I had to guess, I would guess that, knowing that ECB is going to be very, very kind and gentle with their easing package, I do not believe that they are going to sell ahead of it, but we will see. So on the upside, definitely now 2115, 2117 is the absolute important resistance level. On the downside, everything remains the same. Until we do not break 2081, 2083, nothing will happen significantly on the downside. And once we do break that, I just gave you what level to look for below. Now crude. It is looking that the selling is kind of slowing down here. Even though that the overnight last night was a very weak close, as soon as the day session opened, they reversed entirely the overnight range, and now we close at the very middle of the profile. Therefore, we are now very much so confidently have 4115 as our main support. If we do break that, we should come down for a test of 40.68 to 40.5, and then if 40.5 is broken, then it's most likely we are going to go test 40, and once 40 goes, we are back into the 30s, which will be quite damaging for all the oil companies, oil producers, etc, etc, etc. Now if we do hold above 4115, on the upside we have one POC at 42.30, and then 42.5 to 42.8 will be another set of resistance level, and past that 43.16 on the upside. Based on today's close, the battle was even. Neither the buyers won nor the seller won. So I guess when the overnight is going to open in a few minutes, we shall see if one side or another will take the lead, and we are going to either break above today's high, or we are going to come down, break below 4115 in order to go test that POC at 40.68. Now let's look at a little bit what is going on with gold. I'm just going to look at it on a daily. Yesterday we got a bounce. If we are looking at a candle formation, this two bottom down there, it's called a tweezer top or a tweezer bottom. They are usually signs of reversals. You see here, tweezer top, reversed. Let's see if we can find more. Here, tweezer top, reversed. Now we have the same at the bottom. Now for gold, the line in the sand is 1050. We do break 1050. I am very confident that we should come to my downside objective from a long time ago, which I gave you was 1035. If we remain above 1050, this thing is so oversold that if we can return back into 1080, then chances are very great that we are going to go towards 1100. And we can also see that yesterday brought in a huge amount of buying. Now, this kind of a buying at the very low is not necessarily new buying interest. It could be a combination of both new buying interest and short covering, because you must be very sick if you have shorted this from 1180 not to take your profit at almost 1050, which is a huge distance traveled down here. So now we shall see. It is very slightly positive in the very short term until we remain above 1050. And to become really in a better shape, we need to cross back below 1080. Otherwise, we are going to trade within a trading range going from 1080 to 1050. So that's it for today. Thank you for listening. If you wish to join my trading room and get my courses, you can get them all from my website. The package is $550, money back guaranteed 30 days, 5 courses and 1 year to the trading room. Have a wonderful evening. Talk to you next time.